betting is seemingly everywhere. You've probably seen the commercials for companies like DraftKings, and one major financial brokerage is close to letting Americans gamble on political events, including the presidential election. Interactive Brokers plans to open a market for such wagers as soon as next week, but there could still be legal holdups. Joining us now in a First on CNBC interview is Interactive Brokers founder and chairman Thomas Peterffy. Thomas, always good to see you. So tell me, did you have any misgivings about betting on political events? Is there a certain size of event? How did you get to the point where you feel like this product is ready to launch?
So we didn't have any misgivings. This is not going to be the mainstay of our platform because we are going to focus on economic indicators and climate variables, which is on certain long-term questions that some of them are existential questions, such as climate or the national debt. But election betting is important for us from the point of view that it brings in customers. And once we have those customers on our platform, then they are going to be engaged in serious hedging against economic outcomes and insurance kind of products, etc.
Do you think that adding money, skin in the game, always makes these markets smarter, or in some cases, can it corrupt an outcome?
So the evidence seems to be, and the literature is always on the side that the consensus estimate that comes out of a platform where money is on the line is a better estimate of the eventual outcome. So that is the real logic behind the entire idea of these contracts.
Who do you expect to be the audience that's betting on this? I mean, I guess in a way, people who are donating to political campaigns are already placing some skin in the game and money on an outcome. Is this particularly different?
Of course, it's very different. I mean, when you donate to a candidate, you are supporting that candidate's advertising efforts, and here you may want to donate to a specific candidate, but that doesn't mean that you believe that that candidate is necessarily going to win, right? So this is about trying to hedge against outcomes that may be unfavorable to your portfolio, depending on what kind of stocks you're holding, and so that's the idea.
Is there a limit? Should there be a limit on the type of race that's bet on? I know you're looking at presidential, you're looking at swing state Senate. Is that just because the audiences are potentially big enough, or do you see the potential for doing this at the House of Representatives, even further down local level as well?
Well, that is possible, but I think at this point there would be more interest in the presidential and senatorial races. I mean, as you go down the line, you could eventually, list a contract on who is going to be elected to a specific school board. We don't want to go there.
Right, yeah, but I mean, mayor of New York arguably is bigger than bigger than Senate in Rhode Island.
Definitely, sure. I mean, yes, the mayor of New York is going to be, at one point, it will be listed as a contract when the next mayor election comes up.
So tell me overall, is there any point as a society where we're betting too much, or do you think that placing of wagers, whether it's on a stock or it's on a political outcome? I know you're a libertarian, so maybe this is the answer is obvious here that you're going to give, but it's a healthy exercise and a healthy outcome.
Well, I mean, let people do whatever they want to do, provide all kinds of services that they like. If they don't like it, then it's not going to survive, right? So why deprive people of the opportunity?